Okay, we're here today on realagriculture.com for the beef market update with Ann Dunford. Welcome today, Ann.
Good to be here.
Okay, Ann, you can see we've had lots of snow here in southern Alberta the last couple days, so we're live on location in a bunch of snowdrifts. So, okay, Ann, so the cattle market's been, we talked a couple weeks ago, the cattle market has still continued to be to a good returning market. What's the last couple weeks been like?
Well, it looks like these markets are really easy to call in hindsight. So it does look like, for now, I'll put my 2 cents where it belongs. And I do think the highs maybe were put in last week as far as both cash and futures are concerned. Not looking for markets to absolutely collapse, but already today compared to last Wednesday, prices are off a couple $3 live from where they were, but still very much profitable. Is it a surprise? No, we've talked about seasonals lots. April 9 times out of 10 is when the highs will be triggered. It's still a market, like I say, that's being driven by some strong outside fundamental money, but on the flip side, cutouts have been strong in the US. The highest cutouts, which are the wholesale prices, since the summer of 2008. So is this the demand change coming out of the recession? Hard to say. Supplies have been tighter this spring, and that's part of the reason for a strong cutout. So packers have been chasing these cattle pretty good. More cattle around the corner? Yes. Do we sell aggressively at this kind of market that's toppy? Absolutely, and that's exactly what cattle feeders have been doing this week, selling aggressively, even selling May cattle here today on the 14th of April.
Oh, and how about forward contracting into the summer?
The difficult thing with that, Sean, is even though the futures have been at some of the highest levels we've seen in the past couple of years, this par plus Canadian dollar has not made that equation very positive for a cattle feeder. So that's the struggle as we go into July, August, and September, is the break-evens on these cattle. Even with the strong board, when you've got to plug in a par plus dollar, it's just not making the numbers work. So unfortunately, as good as it is today, it feels like sooner or later this par plus dollar is going to come home to roost.
Do you think a lot of producers now, this par plus dollar is sort of becoming a bit of a reality for everybody?
Well, when you're training fat cattle above 90 cents and everybody's making money, I think we like to just put that in the back of our minds, and we'll deal with it when we have to, but trust me, it's something we'll have to deal with around the corner here very soon.
So as we head into the next couple of weeks, what are some of the things that are on the radar we should be thinking about?
Well, we've been watching futures. It looks like they've given us a sell signal, so there's one thing. We're watching this cutout. It's still been very strong, got up to the 167 level US, that's for choice cutout here yesterday, so that's strong. We'll see how long this demand can carry through. Seasonally, you usually see cutouts top late April, early May. Again, how fast does it turn over? Do we get some stability? Are we starting to see consumers come out of their houses after this horrible winter we've seen in the US and look for some products to go out and barbecue and grill? So watch the demand, watch the cutout is our best day-to-day indicator on that. The other thing we're going to keep a close eye on, we've got the Alberta-Saskatchewan Cattle on Feed report out this Friday, US report next week, and of course that's going to give us March placement numbers. So the last couple of reports have said lots of cattle getting placed on feed. That's against that late summer period. So again, some numbers suggesting to us that this is a point in time where we're starting to see some big placements, and be aware of that. Let's
jump back to demand. That's been a huge topic, obviously with the U.S. recession over the past number of months. Seems like the numbers are showing we're sort of coming out of it. We're getting about 30 days from that peak where everyone gets really interested in barbecuing. What are some of the things that you're hearing in that regard?
Well, a couple of things. First of all, yeah, you're right. Remember U.S. Memorial Day, one of the biggest beef eating weekends, of course, and that's in May, so not that far away. The buying's going on today for U.S. Memorial Day. The other thing that was a real positive for beef demand was the news on the hog report a couple of weeks ago that said considerably fewer hogs in the U.S. than what USDA or traders or pretty much anybody in the industry was expecting. So all of a sudden that lifted some of the pork wholesale prices that we'd seen, and of course that's one of the things we talked about last year was all the pork and the pressure on the pork markets bringing beef prices down as well. The two go in tandem. So now that that's kind of been lifted off of the pork complex, you kind of got the H1N1 story kind of in history now, and so pork prices have improved substantially. That's given beef a new zest of light as well.
So basically, in summary, we have enjoyed some profits, and we are enjoying some profits right now, but move cautiously into the summer months.
Absolutely.
Okay. Thanks a lot, Anna. We'll talk to you in 2 weeks.
Very welcome.
For more information on Ann Dunford, go to gatewaylivestockexchange.com.